Welcome back to the Mortgage 101 podcast. I'm Manley Haines, and today's episode is about finger-lickin fiasco.
And I'm Anthony Valentino, and today we're going to talk about how the economy has been in the fryer for the past 2 years, and how Colonel Powell's been running the kitchen on his own with his 11 herbs and monetary spices.
Yeah, Anthony, but instead of a golden brown recovery, we got a burnt batch.
That's right, and we're breaking down on what it takes to cook a crispy economy, the perfect mix of policy, patience, and balance, and how Powell's kept changing the recipe on us.
Hey, by the end, you'll know how the market got soggy and what it'll take to fix the flavor, and how we get back to extra crispy numbers in 2025.
Let's get cooking, Manley.
Picture the Fed's kitchen right now. Grease popping, alarms blaring, and Colonel Powell shouting, data dependent, while the 10-year sizzling at 4.109%. Woo.
That's right, and you're probably thinking, but rates are cooling off. Aren't we finally getting to that golden finish we've been wanting?
Not so fast, Anthony. The market's still stuck in a grease cycle. Every time the heat drops, the Fed cranks it up again.
That's right, Manley. So today we're breaking down each ingredient Powell's recipe has, how he fried the mix, and what it takes to serve up a balanced and crispy economy.
Hey, and don't worry, we brought in our producer, Ryan, as Colonel Sanders to help serve up the secret sauce.
There really is a Kentucky Fried Chicken school.
Yep, today we're making the Colonel's original recipe.
What have you learned?
Fresh chicken makes the best chicken.
And that we use 11 herbs and spices.
Oh, but that's the Colonel's secret.
And special pressure cooking.
So it's always tender and juicy.
Looks like you've learned to make great chicken.
Only way to serve our customers right.
Anthony, let's talk about the market and what's driving rates. Let's start with what's driving those numbers. As of November 2025, tell us what you got.
That's right. Let's set the timer, Manley. The 10-year Treasury closed on Friday above 4% at 4.109, down slightly for the day, and for a brief moment, we even dipped below 4%. This was the signal that the investors had been waiting for. The oil was finally starting to cool, the fryer was steady, and the kitchen was smelling right.
Yeah, but then Colonel Powell walked in and left the chicken in the fryer too long, right when the market thought we were getting free samples, a.k.a. possible December rate cuts. Someone asked, hey, Colonel, will there be free chicken next month? He looked right at the camera and said, not by a long shot.
It's the definition of posturing, and that's exactly what drives the rates up and down. And now, the bond market, they literally went vegan as soon as he said that. Everyone dropped their drumsticks, ran to the salad bar, and the yields popped right back up. Bye-bye sub-4s.
Exactly. A little too much heat on the mic, and the market lost its appetite. The fryer was fine until Colonel started taste testing his own policy again.
Yeah, but I mean, we can see that these yields have been holding slightly above 4.1%. It's giving us a decent foundation here for the next batch of the rate improvement. If Powell can keep his grubby tongs off the thermostat, time will only tell.
Hey, which, let's be honest, that's a big if.
So while the kitchen's still hot, let's break down the Colonel's 11 herbs and spices. So this economy that he's cooking up, it's going to be an overcooked masterpiece if he keeps trying to posture.
It's his flat-out burnt chicken. All right, Anthony, let's break down why this economy is still soggy when it should be crispy. Because on paper, inflation is cooling, the 10-year Treasury is finally calming down, and consumers are still spending. But the economy feels like it's been sitting under a heat lamp for 2 years.
That's right, Manley, and we can't ignore the elephant in the kitchen, the government shutdown. As of recording today, this is day 35. The longest shutdown in U.S. history is after 35 days, which was back in 2019. So we are on the precipice of history making, and not in the good way.
And here's the wild part. Markets are surprisingly calm. There's only about 20% chance of this thing drags past December 1st, which sounds crazy. But the damage isn't just about whether the government is open. It's about what stops working when it's closed.
That's right. And when the Washington shuts down, that's when data dries out. That's when Fed goes blind. That's when everyone's on pins and needles. Investors, Wall Street, lenders, the Fed, everyone steers where they have no government and they have no data. So the unemployment, the inflation, the consumer spending, manufacturing, GDP, it's all gone. We don't know what's going on right now. A ton of this data just stopped printing, and everyone's on pins and needles hoping to say, okay, what's going on here? We need to start understanding and stop pandering on back and forth because the consumer is falling short. Now the economy is starting to fall short. So they need to get their act together.
Yeah, Anthony, no data means no clarity. Powell loves to say he's data dependent, right? But right now he's cooking policy blindfolded, waving a spatula around, hoping he's going to hit the dang stove.
That's right. And when the Fed flies blind or the market flies blind, the markets get nervous. Nervous markets tighten credit. They tight spending and they slow spending at the same time. That means a soggy economy. It is not burning and churning. It is a sloppy mess because of the unknowns that are looking at us straight in the eyes.
Hey, facts are 11 rate hikes. They overcooked our chicken. Let's talk about interest rates because they're supposed to cool inflation, not freeze the country. The Fed hit us with 11 straight hikes in 18 months. That's not seasoning. That's dumping the entire salt shaker into the fryer, not the fire. Same.
Yeah, both of them. And they didn't just hit mortgages. They blasted auto loans, credit cards, business credit, real estate commercial, personal loans. When borrowing becomes painful, the spending slows to a halt. And when spending slows, the economy gets rubbery. The exact opposite of crispy.
Hey, housing took the biggest burn. Those are the facts. Builders slowed down because financing construction got way too expensive. Buyers hit pause because payments jumped from $600 to $800 a month. Sellers, they stayed put because they're sitting on 2-3% mortgages and refused to trade them for 7%. That's crazy.
That's right. And because the sellers are not panic selling, meaning they're going to sit with their 2-3% rates and rake in the rents, and they'll wait till next year when the market recovers, that inventory got stuck in the pan. No movement equals no affordability. Improvement equals soggy market. But here's the good news, Manley. Lower treasury yields, which we are seeing, are finally pushing the 30-year rates back down. And when rates fall, buyers come back. The sellers start listing, and housing market wakes up. That's what we were seeing until the government got into a snafu and everyone's been swiping left or swiping right or whatever you do on that app. They're just not communicating, and now we're starting to feel the pain.
Yeah. Hey, consumer confidence, it got really greasy. Consumers don't need perfect conditions. They need predictable conditions. You can handle higher prices if you feel secure. You can buy a house if you trust your job in the market. But that's not what's going on out there.
Yeah, you spoke about it with predictability. We can also translate that to what's our perception and what's our confidence, right? And if there's no predictability, there's no confidence. And right now, Powell's posture, it's been all over the place. He's been all over the kitchen. One meeting, the economy's cooking again, inflation's under control, extra crispy chicken is going out the door. The next meeting, he's like, oh, sorry, folks, your order got lost, we're starting over. It's like, dude, like back and forth, what is going on?
Hey, Anthony, this back and forth, it's not accidental. Everyone can see the pattern. It's a strategy, keeping markets cautious, keeping inflation contained. But after 11 months of hype and 11 months of straight hikes, the customer base is super irritated.
Yeah, you just pointed out to a glaring fact. You just said that this is strategy. You are absolutely right. This is not by design. The Powell's posture on back and forth policy, that is 100% a strategy. And it's getting old. Investors are getting annoyed. Home buyers are getting annoyed. Shoot, the CEOs are getting annoyed. Small business owners, they want clarity. Confidence is the oil in the fryer. And without it, there are no crispy chickens going out.
None. Hey, credit markets aren't just starting to thaw. here's the turning point. The 10-year Treasury has cooled under 4.2%, and spreads are finally tightening. That means lenders are slowly lowering mortgage rates, even without a rate cut from the Fed.
That's right. And before this government shutdown, we were going into greener pastures. The credit was loosening, the housing was being unlocked, the hiring was being improved. Even small businesses were lending, and the resumes of the applications were rising. The consumer economy was crisping right up. The ingredients are here. The chef, Powell, just needs to stop jerking the thermostat and give us consistency. We don't want soggy chicken one order and crispy chicken the next, because no one's going to come back if there's no consistency.
Anthony, this is why the shutdown hurts, but also helps. Shutdowns are delayed paychecks, stalled approvals, and they jack up uncertainty. But this one is doing something interesting. It's forcing Congress to actually negotiate faster than expected.
That's right. You make a good point there, Manley. Every economist watching this, they're saying the same thing, right? The longer the shutdown, the more pressure on Powell to cool policy. And that's what makes this market optimistic. Weirdly so, the shutdown is hurting the people short term, but pushing rates lower in the long term. So it's not like everything got lost here. We have greener pastures, not just in the short term, but way beyond the horizon.
Absolutely. Hey, Anthony, the bottom line. So we've got a soggy economy, but the heat's coming back. Inflation is easing, rates are dropping, supply is thawing, consumers are still spending, and confidence rises fast when the Fed stops talking in riddles.
That's right. And so long that Powell sticks to a consistent plan, not just a magic trick, not a back and forth, this economy will and can crisp up very fast.
Yeah. Housing wakes up first, small business follows, consumer spending brings the rest. America loves Krispies. We're close. We just need the chef to stop flipping the chicken every 5 minutes.
Hopefully you like all the education that you're getting from Manley and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about us.
It's time for the ever-popular Mortgage 101 Rate Tracker. Anthony, let's talk about what's happening with our predictions year-to-date and how they're panning out.
That's right, Manley. I think we're on track. Maybe not perfectly golden yet, but definitely cooking evenly again. We can jump in this and we look on a quarterly basis. In January of 2025, we started out at 6.64 because there was market jitters, post-holiday rebound. We go down to March, it dropped down to 6.54, nothing crazy, but banking fears, it cooled the yields. Jumping into May, it bumped up to 6.79. It's not the direction we wanted to go, but the debt ceiling drama heated everything up. If we go to August, we were at the tallest this year at 7.02. There was a lot of oil rebounding, CPI sticks, just a lot of uncertainty. But when we look at September and October, the last 2 months, we've seen nothing but reductions. We are all the way down to a 6.31 at the end of October because the 10-year broke the 4.2 threshold. And now, current November, 3 days in, we're at a 6.34 because the 10-year finally settled under a 4 briefly, but it's now back to a 4.109. The volatility is easing, but it's still there.
Yeah. So the year to date, we've ridden the highs, felt the burn, stayed within striking distance of our year-end target of 5.875 to 6.25, but it ticked up a touch from the end of the last month. But I feel confident we're going to see that finish in strong to where we're expecting it.
That's right, Manley. The fryer stabilizing, the flavor's coming back. So long that Powell doesn't toss in another rate hike here or mystery seasoning there, we're on track to make that extra crispy finish by the end of December. That's how I'm feeling.
Hey, you heard it here first. Crispy, not burnt.
Colonel Sanders has always been pretty good at arithmetic. He knows that the fewer miles you have to drive to enjoy his juicy, tender Kentucky Fried Chicken, the more times you'll come by. And now, with all of us planning our driving very carefully these days, the Colonel's right on your way with over 300 locations here in Southern California. So stop by today. The Colonel's face is all over the place.
That's it, folks. Time for our famous Buzzwords breakdown with our legendary producer, Colonel Sanders.
That's right. Looks like Ryan's firing up the fryer. Here we go, folks.
All right, boys. Since today is all about crispy economics, I've got 5 buzzwords straight out of the Colonel's kitchen. Let's break them down. First up today, we have crispy economy. What is that?
That's when growth and inflation jobs are well balanced and just right. Golden on the outside, soft on the inside.
Exactly. That's the sweet spot, right? That's where the rates settle. That's where confidence returns. That's where the market finally tastes right again.
Next term, what is grease premium?
That's the extra yields investor demand when the markets get messy. Oil splattering out of control. What's your take, Manley?
Hey, right. It's fear-based pricing. Until the Fed cleans up the kitchen, lenders keep charging extra just in case the next batch burns.
Number 3, overcooked inflation.
Hey, that's when price growth runs too long in the fryer. Wages rise, costs rise, and nobody can afford lunch.
Exactly, Manley. The fix isn't to throw the food out, it's to turn down the heat and let the supply and demand rebalance. That's facts.
Number 4, rate seasoning.
That's how feds adjust the flavor of the market, adding a dash of rate hikes or cuts to balance the taste. That's what they do.
Yeah, but Powell's been heavy-handed, and too much seasoning ruins the entire meal. You want subtle, not salty.
All right, today's last term is fryer fear.
Hey, that's investors' panic when Powell opens his mouth mid-cook. One wrong comment, and everybody runs for cover.
Yeah, I mean, that's why stability and clear messaging matter. When the fryer's calm, confidence comes back, and so do the buyers. As soon as Powell said not by a long shot, meaning a December rate cut, the bond market went haywire.
Gentlemen, that's your 5-piece combo for the week. No sides, all flavor.
Love it. And that's why we call producer Ryan Colonel Sanders, the real secret ingredient behind the Mortgage 101 podcast.
That's right. And when Ryan's in the kitchen, everyone comes out golden.
Howdy, folks. It's me, Colonel Sanders.
Hey, that's not the real Colonel Sanders. I'm the real Colonel Sanders. This is how you sell chicken.
Howdy, folks. It's me, the real Colonel Sanders. I'm back to tell you about my new $20 family fill-up meal. It's a treasure chest of delicious home-style cooking, but served in containers, not treasure chests.
Anthony, final thoughts. So as the fryer cools on Fed Week and shutdown season begins, remember this. No matter what Colonel Powell is doing in the kitchen, you're the one choosing what's on your financial plate.
Exactly, Manley. And, you know, the Fed, they control the heat. Congress, they're spilling grease everywhere. They don't know what the heck they're doing. But you control your next move. Buy smart, plan for the long term, and make decisions off of math, not off the rumor mill, not off of headlines, and definitely not off of panic or fear.
And that's why we break all this down every week, so you can understand the numbers without needing an economics degree or flame-retardant clothing.
Howdy, Colonel.
Howdy, boys. Hi. I just thought I'd stop in and see if you've been putting out any fires lately.
Right now, we got our hands full putting out our hunger.
Oh, and I see you're using my chicken, too.
Colonel, why is your chicken so good?
Well, it's that secret recipe of 11 different spices and herbs. And then I always use fresh, never frozen chicken.
If today brought you value, hit that like and subscribe button and drop us a question if you want it answered next week. We read every message, even the extra spicy ones.
Yeah, especially the ones that start with Colonel Sanders says he's waiting for 2% mortgage rates before he buys. If Colonel Sanders is waiting for 2%, he's not buying a house. He's moving into a chicken coop.
Okay, time for that tradition, Manley.
Really? We just had a perfect outro. We don't need poultry-based comedy.
Oh, yes, we do. Knock, knock.
Why do we do this every week?
Knock, knock.
Fine, who's there?
Chicken.
Chicken. Ooh.
Chicken's in the market every 5 minutes thinking they're gonna crash before you buy. Lock the deal, get the house, and refi when the rates get crispy again.
My gosh. That one actually kind of landed with what we're doing today.
I told you, good chicken, good jokes, good loans. That's the recipe.
Hey, I'm Manley Haines.
And I'm Anthony Valentino. Thanks for watching the Mortgage 101 podcast.
Hey, like, subscribe, share, send us the next topic if you want us to break something down.
And somebody hide Anthony's chicken joke book before next week, or I'll send him to the coop.
If this episode helped you feel more confident about your home buying journey, do us a favor. Share it with a friend, subscribe, leave a review, and if you've got a question or a topic you want us to cover, hit us up with a DM or a comment. Thanks for listening to the Mortgage 101 podcast. We'll see you next time. If you guys are liking all the information you're getting from us, if you're feeling that we're educating you, please smash that like button, subscribe, DM us with any thoughts or ideas for our show, and also tell your friends and family about it.